At Insightful Value, we look where others don't. Today's spotlight is on Hillenbrand, a company flying under the radar while its stock trades at a low. Is this a red flag or a hidden value play? Stick around as we unpack the story behind the numbers. And as always, this video is for informational and educational purposes only, not financial advice. If you appreciate smart, jargon-free breakdowns of real companies, hit that like button and subscribe to the channel. Now, Hillenbrand might surprise you. While it's perhaps best known for its legacy funeral services roots, the company has transformed itself into a global industrial leader. Hillenbrand now operates primarily in industrial equipment and systems, with key business units like advanced process solutions and molding technology solutions. These segments support industries like food, plastics, chemicals, and recycling, sectors that have long-term relevance even in a rapidly evolving economy. Financially, the company has shown steady revenues in recent years, with sales exceeding $3 billion annually. Hillenbrand's operating margins typically hover around 10 to 12%, which is solid for an industrial company. Their free cash flow has also been robust, supporting their ongoing strategy of reinvestment and debt reduction. What's especially interesting is how the company has handled capital allocation. Hillenbrand has continued to pay a consistent dividend for over a decade, growing it slowly but reliably. At today's stock price, the dividend yield looks more attractive than usual, which could catch the eye of income-focused investors. In recent developments, the company completed its divestiture of Batesville, the funeral business, to become a more focused industrial player. This move was a significant shift in identity, and investors are still adjusting to the new Hillenbrand. The market's hesitation is part of what's keeping the stock price low right now. From a value analysis standpoint, Hillenbrand looks undervalued relative to its earnings potential. The company trades at a modest multiple, especially considering its efforts to streamline operations, expand internationally, and reduce leverage. But of course, there are risks. Industrial businesses are sensitive to economic cycles. If manufacturing slows down globally, Hillenbrand's revenue could take a hit. There's also execution risk as they integrate acquisitions and continue transitioning their business model. On the flip side, if global demand for materials handling and processing equipment rebounds, or if reshoring and green tech trends accelerate, Hillenbrand could benefit significantly. So, why might an investor look at Hillenbrand now? The low stock price, a realignment of focus toward growing industrial markets, a solid dividend, and a management team actively reshaping the business could all point toward potential upside, but patience and a long-term view may be required. At Insightful Value, we dig into companies like Hillenbrand because they don't always make the headlines, but that's where opportunity often lives. We break down the data, strip out the hype, and give you clear, simple insights. If you want more on Hillenbrand or other undervalued companies, head over to insightfulvalue.com. And before you go, subscribe to our channel and like the video so you never miss an update.